After 4 years of failing to meet their cost of capital, global reinsurers have now achieved that benchmark for the second straight year, driven in part by strong market performance. That according to a new AM Best report. The Best Market Segment report is part of AM Best's look at the global reinsurance industry around the Rendezvous de Septembre in Monte Carlo. Here to explain a bit more is Helen Andersen, Industry Research Analyst at AM Best. And Helen, can you set a backdrop for us and explain some of the market conditions that made that possible?
Sure. So the past couple years when reinsurers haven't met the cost of capital, economic uncertainty and volatility in equity markets drove up the cost of capital, and large losses, especially driven by natural catastrophes, hampered returns. So they'd struggled to meet their cost of capital. But in the past 2 years, rates have gone up. Reinsurers have implemented thorough de-risking measures on their portfolios, and which have improved returns. And there were strong equity market performances, especially towards the end of 24, which drove down the cost of capital and allowed them to handily meet their target.
What role have higher attachment points played for reinsurers, and what has the impact been there, Helen?
Higher attachment points are one of the de-risking measures that reinsurers have implemented. And essentially, their impact is that losses due to secondary perils, which have been increasing in both frequency and severity in recent years, are retained more by the primary insurer, which insulates the reinsurer from some of those losses and improves returns.
The report touches on rate. What did you see there, and does it indicate that a hard market is still in play?
So rates really jumped up in 2023, where they increased over 30%, followed by a more moderate increase in 2024. In 2025, they decreased slightly, about 6%. So the market may be softening slightly, but overall rates are still up over 90% from 2017 when they started rising.
How did the median return on equity compare with the cost of equity, Helen?
The median return on equity is down slightly from last year's historic high, but still easily surpassed the cost of equity.
Thanks, Helen.
Thanks, John.
That was Helen Andersen, Industry Research Analyst at AM Best. You can find the full report online at ambest.com. For AM Best TV, I'm John Weber.